Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, April 14th, 2021, and I am pre recording this Trading Places Live for Thursday, April 15th. Futures currently are up slightly after hours. We did see the market reverse on Wednesday, but it's looking like maybe we'll get off to a good start on Thursday. We'll have to wait and see how things transpire over the week, or excuse me, overnight. But at least for now, it does look like we'll get off to a decent start on Thursday. Of course, we do have a ton of earnings reports beginning to come out that kicked off for us today when we saw a number of financials reporting earnings. We'll talk about that just a little bit. But first, let me go through the agenda for you for today. Going to start off with the daily market recap. Then we'll get into talking technically. Max pain. That's something we like to talk about as we approach options expiration, which is the third Friday of every month. So we just have a couple of days left before options expire. Then we'll get into momentum sleepers, earnings spotlight, and we'll wrap up the show with 3 you must see. First, we'll go over to earningsbeats.com. If you are new to Earnings Beats, love to have you sign up for our free Earnings Beats Digest newsletter. Just type in your name, email address, hit that subscribe button. You'll have our newsletter delivered to you 3 times a week, Mondays, Wednesdays, and Fridays, typically before the market opens. It is no cost, no credit card required, and you may unsubscribe at any time. So give that a shot. Name, email address, hit that subscribe button. You'll be good to go. As far as the action on Wednesday, we were in record high territory, but we failed to hold on to it at the end of the day, most notably on the mid caps. You can see over here on the mid caps, we had this move up. Looked like we were breaking out above that 2,700 level, but left the tail up there, came back down and failed to make the close on the breakout. So it was an intraday false breakout. And normally that can be problematic in the near term. It's not a long-term signal, but short-term, it's a bearish development when you have a breakout intraday, fail to hold it, reverse, close down near the low of the day. That's normally not a good thing. But anyway, backing up here, let's take a look at the Dow Jones Industrial Average, up 53 points. So we did finish with a gain. It was one of the few gains, at least among the major indices. And when I say major, I'm thinking Dow, S&P, and NASDAQ. You'll see that both the NASDAQ and the S&P finished lower on the day. That was a really ominous candle on the NASDAQ today. We had a nice uptrend in play. We've been going up mostly for the last 2 to 3 weeks. But after gapping up and starting out strong on Wednesday, and we were above the 14,000 level, we did print a bearish engulfing candle. So I think short term might be a little treacherous here. There's no guarantees, but odds generally favor the bears in the near term when you get this kind of a reversing candle. It would be negated if we can break out to a new high tomorrow, take out the high of Wednesday. That would negate this bearish candlestick pattern, but at least on the surface, it doesn't look very good. Moving on to the sectors, energy. You can see energy had been struggling for a little while, but this support area, 4750, has been holding very nicely over the past 6-7 weeks, and it did so again. We bounced off of that, moved back up above our moving averages. You can see that we made our way all the way back down to the PPO centerline area. Now energy trying to make a push back to the upside. I think a break above about 50.50 to 51, right in there, is the level I'd watch to the upside, and obviously 47.5 to the downside. We want to watch that. Technology, the worst performing sector on Wednesday. That was right on the heels of a very strong start to April. But because of that strong start, maybe we'll see a little bit more profit taking in the near term. We do have options expiring on Friday. I'll talk about max pain in a little bit, but that would favor maybe a little bit more selling in the near term. Communication services also struggled. That was the second worst performing sector on Wednesday. That fell just a little over 1%. Nice uptrend in play. I think when you look at these, well, especially technology and communication services, you can see technology, we, excuse me, we had a a breakout on that accumulation distribution line with the most recent price high, but we did pull back a little bit with today's selling. XLC, we didn't see a breakout, but we were definitely strengthening on this AD line in April. That too took a little bit of hit with this candle today. So we'll see what happens on the heels of all that. Autos, big breakout on Tuesday. This was probably one of the more disappointing moves. Tesla, which had broken out, looked really good. We did see a pullback there. I think the short-term candle patterns suggest maybe a bit more weakness in the near term. We'll need to watch the rising 20-day EMAs. If we truly are starting an uptrend, we should hold if we do see a bit more selling in the near term. So let's watch that. Also, computer hardware. We'd been in a very nice uptrend with computer hardware, but that was a bearish engulfing candle that printed there. So short term, and I'm going to look at these charts a little closer in just a couple minutes and talking technically, but I did want to just point out some of these bearish candlesticks that formed today. 10-year Treasury yield. We did break below the 20-day moving average on Tuesday. Wednesday, we bounced a little bit on the yield, but really we were unable to recapture that 20-day EMA. We got a lot of economic news coming out on Thursday. My guess is we're going to see the yield go lower. Just simply based on you can see the PPO falling after a negative divergence print. It just seems like we've run out of momentum to the upside on the 10-year Treasury yield. I don't think that this is the end of the increase in interest rates. I think yields continue to move higher in 2021. I just think in the short term, after this huge move, I would be looking more for some more sideways consolidation, perhaps even a pullback closer to the 150 level. That's what I would look for. Now, if that happens, you would think it would benefit NASDAQ stocks. But with options expiring, that adds a whole new short-term dynamic that we have to factor in as well. So it's going to be an interesting few days for sure. Let's go over some of these economic reports that are due out on Thursday. I mean, we have a ton. I haven't seen much in the way of news out this week up until this point, but tomorrow, Thursday, we are going to see a bunch. Initial jobless claims. Estimate is 695,000. Last week, 744,000. April Philadelphia Fed Manufacturing Index. The estimate 43.0. March was 51.8. So we're looking for a drop there in the manufacturing index. March retail sales. This is a big one. Retail sales are watched very closely by the market. And the March number expected to rise 5.6%. February was down 3%. And if you remember, January, I think, was up 5 or 6%. So it's been very volatile in terms of the retail sales, and that's expected to continue. March retail sales, if we strip out autos, expected to rise 5%. February was down 2.7%. So you can see that big reversal that's expected. April Empire State Manufacturing Index, estimate 17. March was 17.4, so not really expecting much change there. March industrial production, though, is expected to jump 2.8%. And February, we saw a decline of 2.2%. March capacity utilization expected to come in at 75.7%. February was 73.8. So it looks like maybe our factory's a little bit more at work. And we'll see whether or not that capacity utilization number comes in at that 75.7% level. February business inventory is expected to rise 0.5%. January rose 0.3%. So we're expecting inventories to build a bit. And April housing market index, the estimate 83. March was 82. So we're looking for a little pickup there. But that's a lot of economic reports. Not too many days do we see that many economic reports coming out. Also, earnings starting to come out. We'll talk about a couple of those earnings reports later. But combination, market's going to have a lot to trade off of here on Thursday and into the next couple of weeks. So, March and even into early April didn't have a whole lot of news, especially from an earnings perspective. That's about to change and really did start to change today with some financial companies reporting their earnings. All right, let's move on to talking technically. So I want to start out just going over a couple of these industry group charts that I thought were interesting because automobiles I thought were breaking out yesterday, and they did break out. Volume picked up, but we saw pretty good reversal in this group, and it may be options related. But this looks to me like short term, we're probably going to come down and test this rising 20-day EMA. And the bulls are going to want to hold that. We want to hold that, bounce back to new highs, and let's get that golden cross where the 20-day jumps back up above and crosses the 50-day. Going to be much tougher if price action moves down below that 20-day moving average. So short term, again, it's going to be very interesting to watch. Computer hardware. Let's pull this chart up. Really nice move up. You can see we have gotten the golden cross here. The 20 is back above the 50. The PPO looks good, but we put in that reversing candle, bearish engulfing candle. So I wouldn't be surprised to see short-term selling, maybe as much 3 or 4% in the near term. And that would certainly help in terms of, eliminating or maybe just alleviating some of the max pain issues that we have. All right, how about semiconductors? It's been one of the best areas of the market. We just got a breakout above that February high, and then we came right back down, failed to hold it on Wednesday. I think that 20-day is going to be a big test here for semiconductors. Software just made a breakout above the February high, and right on the heels of that, we get a bearish engulfing candle coming back down, closing near the low of the day. Volume was pretty heavy. I think you got to be careful. I do like this group, and I think it has improved quite a bit, and I think it could be a leader over the next month. But short term, I think we have to be a little bit more cautious. It would be great to go right back up and print a new intraday and an all-time high. That would eliminate the concern I have with that bearish engulfing candle. But anything short of that, and I would expect to see some additional short-term selling. All right, let's look at the bank index. So the banks had a couple companies reporting, a couple big, large money center banks. JP Morgan reported their earnings. Wells Fargo reported their earnings. Banks did jump a little bit, bounced off the 20-day. I still think there's some issues here, though. We got a major top right about 550, a little above 550. And so I think we're going to struggle there to get a closing breakout. And if I'm right about the 10-year Treasury yield moving lower, I think that will put some pressure on banks. Near term, I think we have the possibility going back to the 520 level. If we do, I think reward to risk on many of these banks will look so much better. But we'll be watching to see. The first step that would need to happen, though, is we'd need to lose that 20-day moving average. So watch for that. Pretty big IPO came out today, Coinbase, and it's hard to trade when you're a technical trader and you have one candlestick to go off of. Right now, what I would say is you've got a major resistance level at where we opened today, that 381 level, because on 80 million shares, we sold off. I mean, we did trade above that 381 level intraday, but when we came back down below it and closed below it, I think now that's going to set that 381 level up to be a major resistance area. To the downside, today's low, which was down at 310, that would be the first support level I would watch, simply because that's where the buyers came back in. So day two will be interesting here, and probably likely to see a lot of volatility again. All right, IWF-IWD. This is the growth versus value ratio. And let me just get rid of this, make it a line chart. Get rid of some of the stuff we don't need here. So one of the things I'd been talking about to members, I'll annotate this for you. But our earnings beats members, I'd put in a chart in just a couple of days ago, or maybe it was yesterday in the daily market report. But you can see the top here on this relative ratio and how we broke out above it in June of 2020. And then every time we pulled back, we held this 1.69 level. So here we got down, to about 171, here 170, here 169. But that breakout, that relative resistance, became relative support until we lost it. And then we went all the way down to about 1.55, made this move back up close to this 1.69 level. And then we started to roll back over again today. So this was not good action. I would have been surprised to have seen us go right through 1.69 without some kind of a pullback. But watch this rising relative 20-day EMA. That's now turned up. So it's starting to show us good, solid short-term momentum. You can see the relative PPO's gone positive. So that would lead me to think this rising 20-day will hold. Watch that. All right, Max Payne, let's move on. And so I wanted to just pull up the spider. And, I do a calculation every month looking at all the in the money calls and all the in the money puts, essentially looking for that point at which the in the money calls equal the in the money puts in terms of value of each. Right now on the S&P 500 or on the spider, that max pain point is 390, 390. We're at 411. Now, what I always talk to members about is that this is, to me, is a directional clue. It doesn't mean that in 3 days, I think the spider is going to drop from 411 to 393, although I've seen crazier things happen. But what I would be careful about is expecting too much upside from the market when it behooves market makers to drive prices lower in the near term. And this is one of the reasons why the market historically does well in the middle of a month, but then tends to do poorly once you get a little bit past the middle of the month, because options become a factor in the short term, and they are again this month. So you want to be careful with the spider. The QQQ, which had a rough day today, max pain is down at 321. We were over 340 to start the day, came down to 336. So we're already making a little bit of that directional move back down toward max pain. So we want to watch that. Two stocks that I think could buck the trend and go higher because there's a lot of in the money puts. One is Plug Power, which I calculated on Tuesday evening to have a max pain of 3610, which is just above the 20-day. So I would be expecting a directional move up. And we saw that early on Wednesday, and then we turned right back around and sold off into the afternoon. But I wouldn't be surprised over the next few days to see Plug Power have a little bit of rebound. Same goes for Viacom. Been on this downtrend. We did print a higher high for the first time in about a week on Wednesday, but we couldn't hold it again. I still think there's a chance that we make a run here over the next few days, so I'd be watching that. All right, let's move on to momentum sleepers. So I ran a scan, and let me just walk you through the scan because the NASDAQ had set its high back in mid-February, and here we are now, basically mid-April. And so if you want to run a scan, you want to compare now to mid-April. From a stock chart scan engine standpoint, you want to look at things back in February when you put the language into the scan engine. If you're looking at something from mid-February, you could just say 45 days ago, because each month has roughly 22 trading days in it. And I know February is a little different because it's a shorter month, but I've still used, 45 days is going to get us pretty close to when the NASDAQ peaked. So what I did is I ran a scan looking for stocks that had scooters above 90 45 days ago. So these were stocks that were really hot when the NASDAQ was peaking. And then I also added to this scan a filter for scooters that are currently under 70. So scooters used to be over 90, now they're under 70. All right, so this would have been stocks leading 45 days ago when the NASDAQ topped, and now showing a little weakness 2 months later with the NASDAQ having consolidated for a period of time. Then the other thing I added was I wanted the AD line to be greater today than it was 45 days ago when it was strong, when the price action was stronger. So I want to make sure that the AD line, even though price action may be coming down, I want to make sure the AD line did not come down. And then I wanted to run this against US equities. 17 stocks were returned. I haven't looked at them yet. I mean, I saw a few of the names, but I did not pull the charts up. So I'm going to do that right now, and we're going to take a look at these really quickly. So APTV came up. And if you look at the AD line where it is right now and where it would have been 45 days ago, it would have probably been somewhere over in here. So you can see the AD line met the requirement. I didn't pull up the scooters on these charts, but you can see over the course of the last 6-7 weeks, we've been downtrending while the S&P and Dow has been breaking out the new all-time highs. So relative strength has been deteriorating on APTV. And obviously it was at a high back in February, so it would have been above 90. Scooter would have been above 90. So we had a really strong stock, but now it's consolidating. To me, this is a momentum sleeper. Great momentum, cools off, consolidates. While it's consolidating, its AD line stays up fairly decent. And I think a move back through its moving averages would be very strong. So that's kind of what I'm looking for. And I just wanted to explain a little bit on that on APTV. Next up is Aspen. Here again, 2 months ago, we were at our high. We've been falling back. Look at the AD line. It's going higher. It's almost a positive divergence kind of situation. Can we get back through those moving averages? That's going to be a key. AXTI. Now, this is in the semiconductor space. AXTI made a big breakout in February, and it has pulled back, put in a double bottom, getting close to a triple bottom. But this is a stock where the AD line keeps going up, even though price continues to go down. That could be a good sign of a rebound coming. Baidu, AD line way up while price action goes down. And that's mostly because of this huge move, heavy, massive volume. And you see the reversal that day. So that was a positive day, actually, for the AD line. I think we're going to have to get back through that 20-day, though, before we can really think too positively there. FVRR, Fiverr International, been consolidating, moving lower, trying to get through that 20-day. Today was a bearish day. Looks very similar to some of the other stocks that I was looking at, where we're starting to make a headway, but then we pulled back. AD line still pretty close to that high and definitely higher than it was roughly 2 months ago. So can we get the breakout above the moving averages? That would be a good sign here. iRobot. Now this one, the AD line is higher than it was 2 months ago, but the AD line has not been very strong. I just think we're consolidating here. I think between probably about the 108, 110 area, watch that to the downside. Upside, I think if we can get back through about 125, I think that would be a good sign for iRobot. Jounce Therapeutics has pulled back quite a bit here of late. AD line, though, went to a new high. Got to get through that 20-day. Liquidity Services, just been sideways consolidating, but look at that AD line going up. I think this one looks really promising, but we're sideways consolidating. We're not getting that breakout to confirm yet. Marone Bio Innovations, MBII, definitely pulling back quite a bit. This is only $1.80 stock, so it's got to be for the right type of investor. You got to have a little bit more of an aggressive attitude, mentality. But we are back close to a key gap support area, closer to 170, and it's been pulling back on lighter volume. So maybe this one's getting ready to go as well. NEO, kind of like Tesla. The only problem with NEO is we still haven't gotten through the 20-day. But look at that AD line staying near the high. I think that's a good sign. Namara Medical and MRD been selling off, getting back really to this double bottom. AD line's higher, but overall has been coming down. I don't know. This one isn't particularly exciting to me, and only traded 70,000 shares. I did not have a volume filter on this one, which I usually do. So these stocks that don't trade much in the way of number of shares, I would stay away from. Then you got Natera, NTRA. Look at that AD line moving up. I think a break back up above 110 would be really bullish on NTRA. Plug Power, this one I just mentioned with Max Payne. Look at the AD line. Yeah, it's been coming down for a while, but this is telling me that retailers are selling and institutions are buying. StoneCo, STNE. This is in the software area. AD line near 52-week high. We get a break above 70, volume coming in, that would be bullish. Time Technologies, one of the last three here. AD line's been up from where it was 2 months ago, but it's been down quite a bit from where it was. Price action's weak. This one I don't like as much. Workhorse Group, AD line still up near the high. It has pulled back quite a bit. A lot of support right in about this 11.5 to 12.5 area. I'd like to see that hold. And then last one, XOMA, XOMA, breaking out to new highs on the AD line, but it seems like we're getting these big moves up on heavy volume and then selling off. And look at the volume today, only 17,000 shares. That would keep me away from a stock like this. All right, so those were your momentum sleepers. Let's move on to earnings. I want to pull up SJR. This is Shaw, which reported after the bell on Wednesday. They did beat 34 cents versus 26 cents on the bottom line. I didn't see much of a reaction in after hours last time I looked. So I would just be watching maybe 26 to the downside, or maybe give it that 20-day moving average to the downside. Got to get through $28 to the upside. Couple earnings coming out tomorrow, just to make you aware. Taiwan Semiconductor, TSM, going to get a look into the chips. Then you got United Health, UNH. Bank of America, another big, large bank, along with Citigroup. So you got a couple of banks there to watch. Pepsi, not really doing very well on its chart. PEP, they'll be reporting. Sherwin-Williams. Who else? Progressive. Delta Airlines, JB Hunt, Alcoa. All of those companies will be reporting tomorrow. So starting to see things pick back up again, and this is going to be driving, in my opinion, the market here over the next few weeks. Lots of earnings. I expect very good earnings, but is it all priced in? Does the market need to consolidate? That's what we're going to get answered here in the near term. All right, let's wrap this up with the, excuse me, 3 you must see. And I thought what I would do, because the market had reversal, characteristics just across most areas, I pulled up shooting star candles, which are reversing candles, and then looked at the ones that I thought were some of the more interesting ones and ones that would really bother me in the near term. And so I thought I'd share those with you. So let's take a look first at CyberArk software. A lot of times, anytime off of an uptrend, when we get these reversing shooting star type candles, they're like upside down hammers. Anytime we see these, they make me nervous, but especially if they happen to occur at key levels, like the 50-day moving average. That just tells me we're probably going to move back down to at least test this rising 20-day moving average. Next up, GLPI. This one bothers me because we clearly have a double top. We had a breakout intraday. We were rallying on Tuesday with heavy volume, so it just looked like we were ready to make the breakout, and then the carpet got pulled out from under everyone, and we failed on the close, leaving that tail to the top. That tells me we're probably going to struggle in the near term. And the last one I have is Open Text, OTEX, also trying to get through a major double top, and for the second day in a row, leaving a tail above resistance and reversing back down. So I think with all of that, you got to be careful. All right, that's it for me. I want to thank everybody for tuning in. I'll be back next week on Monday at earningsbeats.com for your next episode of Trading Places Live. Have a great rest of your week, everyone. Enjoy your weekend. See you next week. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.